Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Global markets falter after Donald Trump threatens China with steeper tariffs and expresses his displeasure with the pace of talks between the two sides. Infibeam terminates contract of one of its statutory auditors, claiming that it shared unpublished price-sensitive information. Airtel may list its Africa arm within the next 2 months, according to Bloomberg News. A final decision may be taken at the results board meet today. And close to 700 candidates across 51 constituencies and 7 states are battling it out as polling begins in the 5th phase of the Lok Sabha polls. And if that wasn't enough to stoke volatility, now we have global volatility coming to the fore. Frankly, that is the trade setup for the day. There's nothing much to talk beyond. You can talk about what's happened to the US data that came out and it was very strong, and therefore what the US markets did on Friday was important, or the fact that CBOE VIX is trading at such lows. But Donald Trump tweets take center stage. He says, and I think the trade wars or the fears of the trade wars have resurfaced, because Donald Trump says that for 10 months, China has been paying tariffs to the US of 25% on $50 billion. He's effectively said that these tariffs move up starting this Friday. So he, of course, garbed it under, he's of course tweeted this under the garb of revenues for the US markets moving up, but it essentially stokes trade war fears. Now, retaliation from China would be important to see whether the pace of the trade talks, the way they are going out, a Chinese delegation set to visit the US, whether all of this stays on course or otherwise. Remember, day before yesterday, there were also some mentions of China doing atrocities on a certain community in China, which China, of course, retaliated, saying that these are not atrocities but other things. So there was some fear of this coming up, and now this has finally come about, and as a result of which, across the board, you're seeing red on the screen. Dow futures are down, that is one thing, but the Asian screen is awash with red. The SGX Nifty, in fact, is behaving a lot better than what some of the other Asian peers are. But just look at what's happened across the world. This is the SGX Nifty down about 0.5%. Look at Hang Seng, look at Shanghai. If you look at Dow futures, they are down about 450, 500 points. So really, I don't really need to talk too much about what's going to happen to the Asian markets today or to the SGX Nifty as well. These colors or these rates essentially give the picture. You can argue about whether the Nifty will find support at 11,550 or slightly lower levels, because that's been steadfast, but it's essentially about what's happening to the world that is of paramount importance right now. Not that Qs back home have been very strong. Consumption is looking like it's taking it on the chin. HUL numbers were well, you could argue that they were not bad, as the CLSA report states, but they were not the best numbers, and we've seen what's happened to some of the others like Dabur and Godrej Consumer any which way. So that leg of the market is starting to come off. We are in the home stretch of elections, and therefore volatility inches up. In fact, just before we get the global markets phoner, if I can urge my producer to show what the VIX indicator did in Friday's session. While global volatility is ebbing and CBOE VIX is trading at historical lows, India VIX has inched up in trade. I think in Friday's session it went up to 23 or 24. So in the interim period, as we hit the home stretch of elections, India VIX has inched up in Friday's trade. So there's the difference between what's happening on the global front and what's happening in India. Anyways, we'll get a global voice in just moments from now. Keep in mind, 11,550, as I said, key support. India VIX is edging higher, and outlook from a lot of consumption names are unclear. It's a packed week in terms of earnings. Keep that at the back of your mind as well, because ICICI Bank, Bharti Airtel, Asian Paints from the consumption space, you will have Titan, SBI, HCL Tech, Vedanta, 6 or 7 Nifty names come out with numbers, and a bunch of other mid caps as well come out with numbers. So quite unlike last week, wherein Hero MotoCorp and a couple of others came out with numbers, this week is packed, and therefore very, very important to monitor. Also monitor these stocks. There are a few names which have come out with strong numbers. I just don't know, with the market position the way it is, whether these will react or no, but nevertheless, I'll just mention 2 or 3 of them. Deepak Nitrite came out with a very good set of numbers. I won't talk too much about it because Yash will join us, but across the board, on all parameters, they did exceptionally well, especially on the margins front. Could react positively despite the markets. Federal Bank, exceptional set of numbers, I thought. NII up 17%, net profit moving up, but more importantly, the asset quality, which has been the bugbear for Federal Bank, improving. So gross NPA is coming off, net NPA is coming off. As I said, the big bugbear, looking slightly more sedate this quarter around. So Federal Bank, interesting to see what happens. It was a strong quarter for a couple of other names. Aditya Birla Capital, reasonably strong quarter, I thought, compared to what it has done in the past. And Akzo Nobel, while the top line number wasn't much to write home about, I think the operational numbers looked a lot better for Akzo Nobel compared to the other peers that have come out with numbers thus far. Let's wait and watch what happens to Akzo Nobel as well. So 3 or 4 names on the results front which have looked okay, but the more important point is, with the global markets looking the way they are, will any of these stand to react positively? Conversely, you have to think, give a moment to think what will happen to 2 or 3 key parameters. One, what happens to crude? It's trending on the back of all looking okay, and maybe demand will come back. If indeed trade wars take center stage, then does Brent crude and NYMEX correct a bit more? That is part 1. Part 2 is what happens to Nifty IT. It's been taking it on the chin the last couple of days. The situation that's happened yesterday does not augur well for Nifty IT. So keep that at the back of your mind. That is part 2. And part 3, what happens to spaces where the sentiment is fragile? Autos and consumption, all of them are domestic centric. So nothing about US and China impact them. But if the trade sentiment gets dampened a bit, then it's a problem. Keep in mind, FIIs have been pulling out money as well from the Indian markets, at least the last 2 days. And with all that happening around the world, you don't know if that flow will continue or no. So keep all those things at the back of your mind. However, let's tell you what's lined up on First Word today. It's the collection of the top edited stories that we believe we should bring to you. Rural spending showing signs of tapering, and that's bad news for consumer companies. Agam Vakil Johnson to tell us why. Yash Johnson to tell us why the fourth quarter has been a strong one for Deepak Nitrite. That's well could be the result of the day. Airtel Africa business may be listed on the London Stock Exchange within the next 2 months. PR Sanjay Johnson with that exclusive piece of news. And then Somit, of course, rounds up why Bharti Group's Infratel business is now more a dividend play than a capital gains play. Well, that is fresh indication of a slowdown in the Indian economy. India's 4 large consumer staple makers reported the slowest volume growth in 7 quarters, thanks to falling demand. What's more, the managements remain cautious about growth in the ongoing financial year as well. Agam Vakil is standing by with the discernible consumption trends in the fourth quarter. Agam, I thought HUL and brokerages said that the number was not bad. We'll get to that. But by and large, the numbers that have come out thus far paint a slightly worrying picture.
Yes, we had suspicions earlier in the quarter, and those suspicions are now getting confirmed based on the kind of earnings that we've seen. So we had HUL, Britannia, Godrej Consumer, and one more company which have come out with
paint companies as well.
And paint companies as well, of course. But if I were to just stick to the 4 FMCG companies, Dabur, yes. So we've seen that moderation in volumes, and if we can actually take that average of all these companies out there, now that's where you see. Now what I've done is actually taken an average of these 4 companies in terms of volumes, and currently standing at around 4.8%. That's the lowest we've seen since the last about 6 or 7 quarters. And the last time we saw a lower number where the average was in the negative was back in the first quarter of FY18. So we certainly have seen that weakness come through. Do remember the last 5 odd quarters were very good for HUL, so that actually also helped the average. But well, this of course raises concerns, and as a lot of these companies and a lot of these analysts have been talking about a relative slowdown. That's showing up in the numbers. But let's talk about the growth there. Now, this is as far as your volume picture is concerned. HUL, Britannia, Dabur, and Godrej Consumers. Of course, in Britannia's case, it's actually a MOSL estimate because it doesn't report volumes. But we're seeing reasonably all right volumes as far as HUL and Britannia is concerned. But Dabur and Godrej Consumers, well, very poor. Godrej Consumers, we knew that it was going to be a poor number anyway. But moving on to your revenue growth, again, while we have seen steady revenue for HUL and Britannia, which to a certain extent is a function of the volumes, well, Dabur and Godrej Consumers, again, a disappointing quarter coming through. Margins, again, the trend is not unlike what we've seen in revenue growth. So HUL and Britannia out there seeing, well, anywhere between flattish to an expansion in EBITDA margins. On the other hand, Dabur looking at a 250 basis points correction. Let's not forget there are certain one-offs in Dabur's margins, but Godrej Consumers, again, looking at a little bit of a come-off as far as margins are concerned. So on the whole, it's not just volumes, but also operationally, things are looking a slight wobbly when it comes to the initial indications from the FMCG companies.
Okay, and let's talk a bit about the numbers that came out post-market out on Friday. HUL, what did you make out of them? What are brokerages making out of them? What are the key takeaways?
Right, steady earnings, no problem whatsoever. We always knew that HUL is one of the more insulated companies because they just have their operations well in place, and of course it's also the largest company out there. So in terms of course, we've already discussed the revenue growth and margins expansion, but this is as far as your volumes is concerned. And again, this was on expected lines because there were indications from the management that there could be single-digit volumes growth for this particular quarter, coming in at 7%. It is in line with street expectations, which is working with 6 to 8% in terms of volumes growth. Of course, it didn't make the double-digit point. But let's move on and talk about some other factors as well, which are very important: home care and personal care. And we have seen steady growth for home care, up 13%, and 21% growth in EBIT. So home care now certainly taking the pie. We must remember that personal care is a very important vertical for HUL from a profitability point of view, because that's where you have margins which are much larger. So personal care, of course, has seen some sort of moderation because it's only seen about 7% growth in revenue and about 8% growth in EBIT. Well, expansion in margin is all the same. But there's been a little pressure from input costs. Again, for the sake of all the FMCG companies in this quarter gone by, there hasn't been as much inflation in inputs, and that, of course, is a positive. So that's the reason why we're seeing about 23.3% margins coming through. And among perhaps the most important factors, and the final one out here, is the moderation in general trade indicated by the management as well as wholesale channels. The reason why this is critical is because this feeds into your rural sector, and rural sector is seeing slowdown. Until the last quarter, rural sector was growing faster than urban, at least in far as HUL's case is concerned. Rural growth is now at par with urban, something that has also shown up in case of Britannia, because Varun Berry also suggests that we are seeing a slowdown in rural. So these are some of the key takeaways as far as HUL's earnings are concerned. Some concerns coming in from the rural sector.
Well, let's see if the market extrapolates these to some of the other companies or no. But fragile, the mood in the consumption space, and let's see on a fragile day what happens to some of these pockets. Agam, thanks so much for putting that into perspective. Well, if consumption has come out with bad numbers, Deepak Nitrite has done anything but that. The profit almost trebled in the fourth quarter, and this was mainly driven by its domestic business. Increased contribution from one of its subsidiaries also helped boost earnings. Yash Upadhyay is standing by with the fine print. Yash, we always anticipated the phenol plant will add to earnings. Is that the main reason, or overall the businesses look strong?
Actually, Neeraj, the fact is that the overall business has done quite very well for the company. I'll start with the basic numbers. The revenues have seen a 24% growth, coming in at about 484 crore rupees. Now, this was mainly driven by a strong 11% growth in volumes for the business. Net profit, as you mentioned, has nearly tripled to 56.5 crore rupees versus 20 crores. EBITDA is up 122%, and margins, they have almost doubled as well, coming in at about 22.4% versus 12.5% in the same quarter last year. One of the main reasons for the strong performance for the company was the fact that their domestic business has done exceptionally well. On a year-on-year basis, their domestic revenues have grown 42% to 344.5 crore rupees. On the other hand, we've seen a bit of a moderation in the exports business, falling by about 6%. In terms of their segmental performance, we need to take a look at basic chemicals business. That was a strong outperformer in the quarter gone by. A 24% growth in revenues there, coming in at about 249.5 crore rupees. Now, this was mainly on account of the improved realization in some of the key products that the company sells under this segment, as well as the fact that they have taken some of the capacity expansion in this segment earlier this year. Fine chemicals was largely muted, coming in at about 121 crore rupees. On the other hand, the strong outperformance, or in fact the turnaround in the performance product segment, that is something that is done very well for the company. 53.5% growth there, 126 crores in terms of top line versus 82 crores in the same quarter last year. This was again mainly on account of the turnaround in their optical brightening agents business, which was loss-making up until recently, a few quarters back, which saw a turnaround aided by the shift in the management strategy to higher value products catering to the paper and detergents business. Margins too were fairly high for most of these segments, barring the fine and specialty chemicals business, which was largely stable. In terms of the update for their subsidiary, which houses the phenol, which houses their recently commissioned phenol and acetone plant, both of those plants have achieved 100% capacity utilization in the last quarter, and this is the first quarter that we saw the new plants to run at full operation. They combined contributed to about 537 crore rupees in sales for the fourth quarter. Now this was slightly lower according to Edelweiss because of the lower than expected phenol acetone spreads, but it was partially offset by the cost control measures that the company took in order for the strong growth in this business. In terms of outlook, they see a strong growth potential going forward, mainly on account of the high demand in the domestic end user industries, and as well as the fact that there has been a reduced availability of intermediates on account of the clampdown on polluting industries in China, which along with that they are also adding capacities across multiple products in the standalone business, including sodium nitrite, nitrotoluene, as well as agrochemical intermediates, which should help in debottlenecking and expanding their business.
Yes, just one quick follow-up. So phenol is anyways operating at 100% capacity utilization. So addition from there will not be possible. Addition probably comes in from the other businesses.
Right, that's right.
Okay. Yash, thanks so much for putting that into perspective. That's Deepak Nitrite. Very strong numbers. Let's see if the stock tends to react today. Mind you, the markets aren't quite positive, so you don't quite know what the stock like Deepak Nitrite or Federal Bank or some of the others will do today. The next piece on First Word is Bharti Airtel, which will come out with its earnings today. And while investors will keep a lookout for the revenue earned per user, another announcement could be on the Africa division IPO. Now, Bloomberg News learns that it could have within the next 2 months. PR Sanjay of Bloomberg News joins us now with those details. Sanjay, it's been in works for quite a while. I think we've spoken about it as well. Yep. You believe it's reaching the culmination stage?
Yeah, it's been delayed for some time. Now, the works are there, which is now they have already finalized. Bankers are working towards potential IPO by end of May, and they could be potentially listed by June, and this would be one of the largest IPOs which London would be having shortly. So, if you recall, they were always trying to look at reduce the debt, and in February they had said that they want to, that total debt is around 3.5 billion. They want to reduce in further, so they are looking at raising around 1 billion from this IPO.
Okay. And you believe that this is happening at the point of time only because it got delayed, or is there a tactical reason for them trying to do this now and list it by June?
So what bankers are saying that this is an ideal time. The markets were not that very good and it's not opportune. So banks were timing. They claim that it is timing at such a manner they would be getting better valuation and a better response from investors.
Okay. Sanjay, thanks so much for putting that into perspective. So that's PR Sanjay with this news, and watch out, aside of the ARPUs and the numbers that Somit will look at, there's a very important announcement that you need to monitor. Speaking of Somit, he joins in for the next piece on First Word. Consolidation amongst telecom operators has hurt Bharti Infratel the most. Tenancy exits have put the tower company's business under pressure, but shareholders may be taking comfort in the consistent flow of dividend from the company. Somit, as I said, joins us right now to give us a sense of what Infratel has to offer an investor at this stage. What becomes a dividend play from what people usually like to do in a company which is backed for capital appreciation?
Well, yes, given the fact that it has lost tenancies and there are near to medium-term risk and also long-term risk, the company might have now become a dividend play rather than a growth story. So if you see currently in the telecom industry, there are more tower service providers than the telecom operators. In the tower space, there is Infratel lenders, there's ATC, there's GTL Infra, and now there is Reliance Industries InvIT, which also has tower and fiber assets, while the users of these tower assets are only three, that is Vodafone Idea, Airtel and Jio. Now this is because of the consolidation that we had seen in the telecom operator space. In the last 3 years, the number of operators have reduced to only 3 from 10. Now, because of this, Bharti Infratel, the listed tower company, has lost more than 47,000 tenancies in the last 6 quarters. Now, this drop in tenancies also led its tenancy ratio fall below 2 times for the first time in the last 19 quarters. Now, because of this negative impacts, if you see the share prices of Bharti Infratel, they have dropped nearly 16% in the month of April, marking its biggest monthly decline since listing. And this is after a 18% drop in the last 3 years to 31st March 2019, in a time period where the benchmark index, that is Nifty 50, rose nearly 50%. So this is what has happened so far with the company. And going forward also, if you see, these issues are expected to continue, because for near to medium term, if you see, Vodafone Idea is expected to rationalize its tower counts, because they have stated that they need to bring down their costs. So rationalizing tower is one of the options that Vodafone Idea has. Additionally, if you see, more than 4,300 tenancies of Bharti Infratel, that is nearly 2.5% of its total tenants, remain in notice period. So this will be going out of their space. Also, if you see, the fastest growing and the only profitable telecom company, that is Reliance Jio, will now be focusing more on its own tower companies, that is on its own tower that is presently in the InvIT, because it is looking to list its investment infrastructure fund. So that is also a near to medium term risk for Bharti Infratel. For a longer period, if you see, there's always a risk of further consolidation in the telecom operator space because of the stressed financials. If there is no improvement in the tariff rates, operators could further cut down their costs, which would include less number of towers or rental renegotiations. So this is the long-term risk that is present for Bharti Infratel. So what does this mean now for Bharti Infratel? Well, it means that Bharti Infratel has now become a dividend play rather than a growth story, what it was earlier, because at least for the near to medium term, there are the growth prospects for Bharti Infratel look bleak, and for the longer term, there are multiple risks that prevail. Now, however, on the dividend front, the company has been generous. In the last 3 years, the company's dividend payout has topped around 100% on an average. Now, this was possible in the back of the free cash flow generations of the company and because of no debt. Also post its merger with Indus Towers, the Bharti Infratel will have some debt in its book, but its free cash flow generations will be boosted by another 500 to 550 crore rupees, because the company will be saving close to that much amount from dividend distribution tax that it used to pay earlier. So this could continue for the company. However, some of the analysts believe that the dividend payout could also come down going forward because of the risk that we just mentioned that Bharti Infratel says in the near to medium term and also on the long term basis. So we'll have to watch out for how the dividend payout continues for Bharti Infratel now.
Okay. Swami, thanks so much for putting that into perspective. That's all that we have on First Word today. Lots more lined up on Indian Open. Infibeam, Cardillo from amongst the stocks in news, and then global markets which have faltered after Donald Trump threatening China with steeper tariffs. We speak to Seth Freeman of Glass-Ratner Advisory at 9:30. Decode the March quarter earnings with Vinay Shah of LIC Housing Finance and Sudhir Singh of NIT Technologies. But after this break, a full tilt towards the day's trade. Stay tuned to Bloomberg Live.